So let me start over. I guess I'm going to have to start over. Let's go back to Bitcoin. I'm going to have to edit out the first part. All right, never mind. That's fine. So Bitcoin is getting ready to do something, and I've been looking at this this triangle on Bitcoin, and in the last stream, yesterday's stream, I was saying let's just be patient, let's just wait, let's just see what happens. And what you'll notice is that as you give it time, if you give the price time to figure itself out, it will start to create patterns and it will start to form trends. And once the price starts to do that, you can begin to either trade that or use that to form a bias to trade. And so obviously yesterday the price came up. It came into this trend line, which I didn't mark out, but it was there because you had 2 points already, and it sold into that. And so obviously some people took shorts, I guess, but now we have this upper trend line, and we have this lower trend line as well. So it hasn't actually managed to reach that. But what you can see now in Bitcoin is some sort of equal triangle. Yeah, see, this goes a little bit more and the line is back there, but that's by the by, that doesn't matter. And this is quite good for us actually, because now we have a definite trade at hand. If we can break this trend line and then a little back test, we could long, you know, that's the long, because we've broken this upper trend line. If we can go up, whether we squeeze this level or whether we just break the trend line, back test and then squeeze, once this trend line is broken, based on the shape of this triangle, you would expect the price to go up to match like a 1-to-1. You would expect that, and you would expect new highs. That would make sense, and then we have to see what the price does at the new high. I think it's a lot more likely right now for the price to go up and break that upper trend line than the lower trend line. Quite simply because what I've noticed is every time the price is dumped, it gets quickly brought back up. And so I think this is to do with the sentiment of the market, with the big news, the ETFs are ready, the ETFs are launching, BlackRock is launching an ETF, and BlackRock has never had an ETF application rejected by the SEC. So based on that record, you would expect everything to go smoothly, and it would be very unusual for suddenly for the ETF to be rejected. Now, whether it gets delayed or rejected or accepted, I think those are the two possibilities. And everything that I've been reading suggests that there's no delay. Like, it's the final things have been done, which suggests that the ETF is ready to launch. And then the next question is, are we going to get a sell the news event? And I think it's always possible, but I think it's quite unlikely, simply because a BTC ETF opens up new liquidity to the market. And the new liquidity is coming from basically all the companies in the world who can now buy BTC and put it on their financial books in a very legally formulated way. So I think a lot of companies may be looking to take an initial position in Bitcoin once the ETF launches, and that would require a market buy, some sort of market buy. So I think you would expect some kind of increase in volume with an ETF launch. And I think a lot of people will be looking to sell a little bit higher rather than just sell a launch where we're still trapped in a range, you know, like we're still in this range. We haven't gone anywhere. We're still ranging. And that's, if you look at this channel that I've drawn, look, we're still range bound. We're still range locked. It's very unlikely that people are going to suddenly sell big when we're in the middle of the range. It'll be a lot more likely that you get big sells as we take higher highs, or if we were to lose significant lower levels. That's kind of the two scenarios where you're expecting bigger sell-offs. So it's I think it's very unlikely. And obviously you can see all these like red expanding candles, but quite simply, these are over leveraged traders getting burnt, every single one of them. So what happens is, like, these recent rises have been highly leveraged, and then what highly leveraged traders do is they move up their stop losses, and then as the price comes underneath, you get a big liquidation events. And I think the same can be said here, and then you get big liquidation events, and these big candles now that are going down are big liquidations. And we're getting to a point now where it's becoming less likely for liquidation events to happen, because they happen. Look, they've happened. And naturally now, if anyone is playing this high risks, high roulette, high risk poker, whatever, where it's just over leveraged longs, I imagine that most people's liquidity is going to be here. Their liquidation level is going to be here. Yeah, that would make sense. So you have to contemplate these things. And I think at the same time, the smart money, usually when the smart money wants to fill larger positions, they're looking for large market sells. So larger market sells are going to be underneath these two wicks here, and then probably under these wicks here, because those are the liquidation levels. So if you've got a big corporation looking to fill a large position, they naturally want to place their limit orders where there's a large volume of market selling, and that will be at these underneath these lows. So because what happens is, if the price comes down, highly leveraged traders get liquidated, which is a high volume market sells, and so naturally large limit orders can fill, because all of a sudden you've got the whole market selling, filling your limit orders. So I think if a big player wants to fill large positions, rather than try to fill it in the middle of a range, what they'd be more inclined to do is wait for the price to come back and liquidate traders, and then they can fill positions, and they also get a better position because they're getting filled at the lows rather than somewhere in the middle. That's usually what happens. So I think a lot of people are anticipating the price to break out upwards, and I think I've seen a lot of posts on Twitter which some significant traders have taken leverage long positions, or they've closed their shorts, they're out of all their shorts, and there's a lot of anticipation for what's about to happen. So how would you trade this? Well, I have a trade plan which I did earlier, and I'm going to put back my lines, and I'm going to show you what I'm looking for now. So I'm actually looking for us to come and for a long. I'm looking for us to take the liquidity underneath these lows, and then I'm looking for some kind of swing failure to come and bounce off this lower trend line. And I'm not going to just blindly take it. I'm going to wait for the price to come back above this swing failure level, and then I'll take a long. And then my initial target is going to be this upper trend line, or somewhere in between, and that's kind of what I'm looking for a long, right? Now if you want to scale in the long, then clearly your invalidation is going to have to be under one of these lower pivot points here, and you have two here, and then you have the main one down here. I'm not expecting this lower one to be reached, but anything can happen, so you have to be prepared for whatever reason. You always have to be prepared for this for a V-shape taking all of this liquidity. You have to be prepared for that. It could happen. So I think if you really want to play this kind of high stakes poker with highly leveraged trading, realistically your liquidation level should be much lower. But anyway, I mean, that's not my business. That's your business. I think I don't think I'm looking for a short right now, and I wouldn't short the next touch of this trend line, because we've already hit it potentially 4 times, yeah, from the high, but maybe 3 if you don't include the top. I think you'd say that that's 1, that's 2, that's your 3rd time. Usually with these trend lines you don't attack it the 4th time, so I wouldn't necessarily expect people to sell into the 4th touch of this trend line. I wouldn't expect that, and it may happen, but if that does happen, then they'll probably get liquidated very quickly, because there aren't, like, the biggest shorts aren't going to enter in on the 4th touch of this trend line. It's usually the 3rd touch. So actually I'm expecting more longs and much more volume at this level than volume coming in at this level. And then actually, even though it would be wise to take profit just in case, the reality is I am actually thinking that maybe it is possible that we break this trend line and continue. And then if we were to do that, then I would, you would expect this, like a 1-to-1 on this triangle breakout, and then maybe you would expect something like that. So that would, you are then targeting the previous high, and if we can squeeze up there, that's when maybe you would be thinking about either a short or just to take a significant portion of your profit. And I think the thing is that what you have to consider is that if, go back and get rid of these, if the price gets back into this range, this upper range here, so basically this upper range value area is this red line that I have here, this upper range value area low. If the price gets back up to there, that is considered a sign of strength, and you could long the sign of strength, and your invalidation would obviously be to lose the upper range again. You'd have a very easy invalidation. So if we do manage to get acceptance into that upper range, then the reality is that I would be expecting an increase in volume to go up, and the target then would be to liquidate the shorts who have their stop losses above these highs. That would be the target, and then we'd have to see how far it squeezes up, because if you get a liquidation event there, it's very likely that the price will squeeze up, and then now we're in a new range. Now we're in a higher range. That's kind of how the price moves and behaves, and then you would have to be looking to take profits higher up. I think if we get a breakout, then that is the kind of expectation of the price to break out, to come into this upper range the volume would come in to squeeze the previous highs, and then we would go up and form a new range above this current range that we're at. And actually, if that was to happen, then you'll get a large amount of volume coming into the market because of the FOMO that would enter the market. I think a lot of people, see, the thing is, like, even though we are range bound right now, I think a lot of people are still out of the market, because on the higher time frame, I think a lot of people have missed this move all the way from when we were here. I think a lot of people were hoping to come for lower. They were hoping for the price to come here and coming at 20,000. So I think there's a large amount of liquidity that's out of the market right now. And we've had this unbelievable rally, yeah, and we haven't really had any major pullbacks. Like, we haven't had a drawdown on the price. So I think there's a lot of people who have a large amount of capital and they're just out of the market and they're trying to get in. And how do they get in? Well, they can't, because the price hasn't pulled back. This is just what's happening. This is what's happening before our eyes. There's a large amount of people who are trying to get in, they can't get in. The price just keeps on going over. Now people are looking at the price and they're going, I wish I came in at 34. I wish I came in at 38. I wish I came in at 40. Like, that's the thing. The price just has been keeping on going up. A lot of people were selling in this lower range, 25, hoping for the price to go down so that they can capture a better position at 20 or even lower at 15. But this rally has proved to be very strong and a lot of volume has come in. And if the price continues and people are still out of position, then I think a lot of people are going to start to FOMO in, which could push the price higher and higher, and that's when you're going to get higher prices. And if we are able to take out this high here, then it's very likely that we could squeeze up further. There might be a large amount of liquidity above this high here. There might be people who are short and they still haven't closed their shorts because they just weren't expecting the price to come up so high on this single run that we've had on this move. And with the increased volume from the BTC ETF launches, it is very possible that we do push up, you know. And I think a lot of people are well positioned, much lower, and they're highly leveraged, and they're not under threat. None of these longs who positioned in all the way up to here are in danger of being liquidated right now. You know, they don't, and a lot of longs, you don't need to move your liquidations up to be too aggressive. It could be just, that could be the nearest liquidation level for a large amount of these longs, and we're very far away from reaching that point, you know, very far. We have to lose some significant levels to get down to that point. So what these bigger leveraged longs do is, with every dip they add to their long position, and so they keep on pushing up the size of their position. And that's what we're seeing now. We're seeing the prices being gobbled up by these highly leveraged longs. That's what these are. These are liquidation events. So this is all of the late longs getting liquidated. But what's happening is that the price is being gobbled up by these lower longs, these highly leveraged lower longs. And all they do is they kind of bring up their liquidation levels slightly. And so instead of maybe being their liquidation level being at 14,000, maybe now it's at 15,000 or 16,000. But instead they have a larger position and they just keep on building their position. At every level that they go, they keep on increasing the size of their position. So I'm just waiting to see what happens with Bitcoin now. I think we're in this triangle. I think it's more likely that we break up than down. If we do go down, I'm looking to take a long at these once we take out these lows. Otherwise, as soon as we do break out, I think a lot of people are going to long that, just break out long. That would make sense. And then if that was to happen, if you were to break out long, then your invalidation would probably be this pivot low, wherever the pivot low is, and your target would be the previous high up there. You'd have a very easy trade for this breakout long. And I think once we get into this range here, then there's going to be a large increase in volume, because that would be classed as a sign of strength. That's the kind of trade that I'm looking for now. An SFP of these levels, or a breakout long of this upper trend line to go into the upper range. And then once you're in the upper range, you could actually add to your position, because then you are expecting to take out these highs, and hopefully if you take out these highs, you'll squeeze up. And if we do squeeze up, then we'll be in the upper part of this channel that I've drawn, and you'll have a position underneath the midpoint of this channel. You'll be very well positioned with that long position if we do break up and we start moving up to the next level. So we're at a very important point now. I think the whole market sentiment is bullish. I can't see any negative bearish sentiment, and I don't think people are trying to aggressively short. So you'd only really be worried if you started getting big shorts, and I don't see anyone shorting at these levels. I don't see any big shorts coming in at these levels. I don't even see any big take profits coming in at these levels. Yeah, I just don't see it. I think the next big short would be a failure of taking, like a squeeze and a rejection of these highs. And then if we come back into this range, and if we take the liquidity of these highs here, and we go up, we squeeze up, and the price comes right back down. And I'm not talking about a failed auction now, I'm talking about an SFP, a swing failure. And then we come back down, then I think the next push up, you could start getting some shorts with the validation above that high that's been set. That wouldn't necessarily look bullish, because you're not expecting that kind of behavior. You're expecting a squeeze up, and then potentially with a bit of weakness in the way the price moves on a back test, you could then probably look to short this to come all the way back down. So you're basically failing to enter the top of the upper range, and you're just basically taking liquidity to come back down in this range. But I wouldn't just blindly take that trade. I'm waiting for the price to clearly reject. I want to see the price to clearly reject from this high. I want to see the price to come all the way down. Then I want to see a retrace into some level of confluence, whether it's the golden pocket aligned with the value area high of this range. And even then, I won't go heavy with the short. I'll scale into a short position, making sure my validation is up here, just in case this happens, like it's always possible. So you'd have to ladder in your short, because if you're right and there is a rejection of these higher levels, then it doesn't really matter if you short right at the top, or if you short lower, or if you scale in your shorts, because then the thesis is that now we're heading down your target is now the bottom of this channel. Yeah, you're still in the range, or you're still going back down to fill the lower levels, to capture lower levels of liquidity. Yeah. So it wouldn't necessarily matter if we do get rejected from that level. You can play it safe. You don't have to be aggressive with your shorts, and actually you could wait for other shorts to show themselves, and then on the back of increasing volume on the way down, you could start laddering in shorts. So you can just wait for other bigger players to take shorts, and they will, because the bigger players will want to cover their longs, and they have a larger amount of money at stake, and they will be a little bit more aggressive with the way they short, because for them these smaller moves mean significant loss in portfolio value in comparison to the small, like me and you, like, you know, we're there to, with that, for them it's multiple millions and more for every percent or 0.5%. So they'll want to cover their positions. I think Bitcoin, it's pretty clear what's happening, and I don't think we need to go over it anymore.